are doing well. So, welcome to the first class of the taxation. I am your instructor. My name is Qasim Mushtaq, and I'm the one who will be taking you along this journey of the taxation. Now, before we start, I would like to have a formal introduction with you guys, and I would like to know that what you guys are doing in terms of, I mean, if you guys are a full-time student or doing a job or something, what papers you have opted so far and cleared so far, and what papers you are opting this time as well, right? So let's start. And first one is this is Anabe. I'm sorry if I pronounce your name wrong. Can you please unmute yourself and tell me? Can you hear me, guys, properly? Okay, and the second one is dialogue. Can you hear me? Okay, Cameron is saying yes, you guys can hear me properly. Dialogue, can you tell me please about yourself? Can you please unmute? Okay, Cameron having an issue with the mic. And what about the other ones? All of you guys have an issue with the mic or something? Okay. So you guys can keep on typing it in the chat box. Then we have the Mahiro here as well. And Mahir, if I'm not wrong, I've seen you before over here.
Hello, sir. Yes, I have done F2 and F3 paper with you before.
Okay. And now this time you're opting for the tax.
Yes, taxation and also business law and corporate rate.
You're opting for the business law and the taxation, two papers this time.
Yes,
Okay. And you are doing a job or a full-time student?
I am working as MSO,
Okay.
Management
And
Support Officer.
okay, very good, very good. And you will be able to take out the time for the all for both the papers, and you will be able to, like, cover it up and everything, right?
Yes,
Okay, okay. And you are done with the F2 and F3, right?
yes. I completed
Okay,
level
very,
1.
okay, very good, very good, very good. It's good to know. So how much you scored in F2 and F3? I mean, you didn't tell me, I guess.
69 in F3,
Okay,
72 in F2.
very good, impressive. Very good, very good. So welcome back, Mihir. Okay, then we have, okay, lots of people over here cannot unmute their mic. What about the okay, who else came and also had an issue with the mic? So we have Rashmi over here. Rashmi, can you unmute yourself?
Hello, sir.
Hello. So what papers have you cleared?
So I have completed level 1 and I'm
Mhm.
currently doing taxation.
Okay, only one paper this time.
Yes,
Okay. And you're doing a job?
yes, I'm working. I'm an accounts clerk.
Okay, very good, very good. Fine, 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 fine. Welcome, welcome to the class. Okay, then we
Thank
have this
you.
is what should I call it as? Normally this is the Shankar, but this is Sankar. I'm sorry if
Hello,
I
sir.
pronounced it wrong. Hello. First tell
This
me what's
is
your name?
yes. My name is Sankar Jayesh. I'm from
Okay,
Mauritius,
okay,
and I'm a full-time accountant at Sanlam Trustees International. And I have completed two papers in level 2, financial reporting and financial management. And now
okay,
I'm opting for taxation.
okay, very good, very good. Very good. So, and you cleared these papers in the recent attempt?
Yes, in the recent attempt.
Okay, very good, very good. Okay. Before we formally start, I mean, if I talk about myself, I completed my ACCA back in 2007, became member in 2009, and then I eventually became the FCCA as well. And if I talk about as far as the teaching is concerned, I've been teaching since 2005. And to be precise, it's been around 20 years and 4 months now that I am into the teaching. And I remember when I completed my CAT, I started teaching in the CAT as well. At that time, we had a college over here in which I got the opportunity. And then somehow, some way, I was being stuck in the teaching. Apart from that, when I was into the finals of my ACCA, I shifted towards the articles as well. So I completed my articles and everything from the KPMG. Then I started working as an audit manager as well. And then finally, I shifted myself towards the teaching full time. So here in Pakistan as well, I have an arrangement with a local college and university as well. And then in the evening, I have the arrangement with the Hamzah Academy. With the Hamza Academy, I've been over here from past like around 5, 6 years now. And if I talk about myself and Mr. Hamza, we go back like around at least 12, 13 years as far as the friendship and the acquaintanceship is concerned. So we've been together from like around 12, 13 years or so, right? So this is what I have. Overall speaking, if I talk about the taxation, this is gonna be my fourth year now that I am into the taxation and all as well. Okay. As far as the paper itself, one to two different things that I would like to add over here is because of the connection issue, might be possible at times my voice start to break up or something. So no need to you just straight away drop me a message. So if you feel like my voice is breaking or something, you can tell me so that I can straight away switch my connection. Because this time of the year we have the monsoon over here because of which we have lots of rains and all. Right? One thing. Secondly, to be honest with you, if you want to be successful there is a secret ingredient which you have to for the sake of the practice and all, and that is the regularity and punctuality, right? You guys have to ensure the regularity and punctuality. If you guys ensure that, I can ensure you that you will get through as far as the paper is concerned, right? I mean, if you are regular, if you are punctual, then as far as scoring the 55 to 60 marks are concerned, that is going to be my headache, and you will be preparing yourself of marks you can you can get, right? I will make sure at the end of the day you will have to prepare yourself to score the over and above marks that you can in the paper, right? So third point, if we talk about the tech, this is going to be a standalone paper for now because there's no it. And if we talk about any further paper, then in the optional paper we have the advanced taxation. So that is going to be like way after a time. So technically I call this paper as a standalone paper because you don't have a prerequisite knowledge to it. And technically speaking, even if you have done some graduation or something before joining the ACC and all, you have not came across this paper ever before, right? So this is gonna be something new to you, right? And as far as the composition of the paper is concerned, this is more or less like around 80 to 20 ratio. Maybe I'm saying 80 on a bit lesser side, but 80% is the numerical, 20% is the theoretical paper over here, right? We are going to discuss in a while as far as the paper format and everything is concerned as well. We'll talk about that as well, right? So this is more about the number crunching. This is more about like how you have to calculate the tax for each and everything that we are going to come across and all that. So we are going to cover it up. But there is an inherent limitation to this paper. And one inherent limitation, I told you that this is a standalone one. You don't have any prior knowledge about it. Secondly, if I compare the course is a bit lengthy. I mean, as compared to any other paper in the whole skills level, the course is lengthier. Like, and this is lengthier by 25 to 30% more than any other paper. I mean, you can compare it with the audit or the financial management or the performance management, whatever paper you want to compare it with. Like, the course content is going to be 25 to 30% more than any other paper. So this paper requires your time, right? And then secondly, these are going to be very small chunks and very small concepts. So all concepts, they need a bit of a reinforcement, right? So you have to ensure that, on a daily basis, you are able to find 1 hour on a daily basis for your tasks, right? And during that 1 hour, I mean, when we are going to start, I mean, in this week, you won't be requiring an hour, you'll be done earlier. But later on, when we are going to cover up the stuff and all that, at that time, you will be requiring some time to sit, read, get through what we have learned so far, and then reinforce it up, right? So that is something which is going to take, and that is going to be requiring your time. And the key to success, again, that is going to be the reading. The more you read, the more you understand. Even this is a computational paper, but still, this paper requires your reading as well. So you have to read from the study text as well. I am going to share you the latest study text that we need to have over here. I'll be sharing you the Kaplan exam kit. I will be sharing you the Kaplan book as well. Kaplan exam kit is the best over here for the taxation paper. So we will be officially using it into the class as well. And then the ACCA Study Hub, that is something which is going to help you again with the reading and with the practice as well. So this is what overall speaking we have over here in terms of the paper that we have over here, right? Now, if I go, let me share my screen with you. Okay. Just 1 second. Okay. As far as the paper is concerned, we have the tax TX UK. Now, as far as the syllabus is concerned, we are going to have the UK tax system and its administration. We are going to have the income tax. Within the income tax, we are going to talk about the national insurance contribution as well, that is the NIC. Then we are going to have the chargeable gains for individual and companies as well. Then we are going to have the inheritance tax. Then we'll have the corporation tax. Okay. After the corporation tax, we are going to have the value added tax, and then we are going to have their employability and technology skills over here, right? So this is the overall paper that we have over here, right? So these are the topics that we have to cover up, overall speaking, into the taxation paper is concerned. Now, this UK tax system, again, I mean, if I talk about this one, overall speaking, as far as the segregation is concerned, we have individual, then we have the companies over here, right? And then on this side, I mean, in the UK tax system, this is going to deal with the individuals, this is going to deal with the companies, and overall speaking, you will be talking about their income tax liabilities separately over here, separately for the company, separately for the individuals. You are going to have the NIC on employees, on employers, then on self-employed as well. Then you are going to have the chargeable gains as well for the individuals and for the companies as well. And then you are going to have a inheritance tax liabilities as well, right? On the other side, if I go, towards the other side of the UK tax system, from the corporation point of view, you are going to have the corporation tax liabilities, and in the corporation tax liabilities, you can have an individual company and you can have the group of companies as well, right? So this is the second half. And if I talk about in between, we have the VAT over here, that is the value added tax. And this VAT is something which is going to be for the individuals over here as well, and which is going to be for the corporation tax, corporations or the companies as well, right? So this is basically the bifurcation of as far as the syllabus is concerned. We will be focusing on the individuals, we will be focusing on the companies as well, right? Now, if I talk about as far as the paper is concerned, as far as the exam pattern is concerned, we are going to have a section A over here. In section A, we are going to have 15 MCQs of 2 marks each, and the total are going to be 30 marks over here, right? This is the section A of the paper. Then in section B, we are going to have 3 questions, and they are going to be the MTQs over here, and those MTQs are going to be of total 10 marks. Basically, each MTQ multitask question is going to have 5 questions each. That is 5 questions of 2 marks each. So 5 into 2 is 10 marks. So each MTQ multitask question is going to have further 5 MCQs that you will have to solve. So technically, if you have 3 questions, this is going to be 30 marks as well. And then in section C, you will have, one question for 10 marks, and you will have 2 questions of 15 marks over here. This 10-mark question is going to have the 10 marks over here, and this 15-mark question is going to have total of 30 marks. So the total paper, if we look 30, 60, 90, and this is going to be 100 marks paper, and we all know that the passing percentage is 50%, right? And overall speaking, in the section C, we are going to have a main focus on income tax and corporation tax as well. So basically, one question is going to be from the income tax, one question is going to be from the corporation tax. The one question, the third one, because we have 3 questions now. So the third question is also is going to be from the income tax. But if you have been tested for the individual, might be possible you will be tested for the self-employed, might be possible you will be tested for the partnership, might be possible you are tested for the individual company. So this is something which, like, the area is open and the examiner can decide about what question to ask. But mainly over here, the questions are going to be from the income tax or the corporation tax over here, right? So this is what mainly the area is going to be over here for you, right? And overall speaking, if we talk about, we are going to have one common thing over here, and that is we are going to have a Finance Act of 2025 over here, right? So we are going to have a Finance Act of 2025 that we have to follow over here, right? So this is what, overall speaking, the approach is going to be from, as far as the paper is concerned. And if we talk about the Finance Act, this is something we all know that every year, in January or February, there is a Finance Act which is presented into the Parliament of the UK, and that is something which is approved and accepted by the Parliament, and that act is something which is effective for the next year. So right now, till the next March attempt, we have this Finance Act 2025, which we are going to follow, and we are going to have over here. I mean, this Finance Act, if I talk about, let me just show you over here what does this Finance Act means. Let me share this with you. Now, this is something, these are the tax rates, and these have been extracted from the, the Finance Act, which are going to be relevant to us. I'm going to give you a brief idea that what is a Finance Act or how we are going to use it up, right? And this is something which is also provided to you as a supplement with the paper, so you don't have to rot or you don't have to remember the rates, right? You don't have to learn it by the heart, because this is something which is going to be available to you as a supplement with the paper. So while solving the question, when it comes towards the rates or applying the tax rates are concerned, you are going to open this up, this table, and then you are going to look at the relevant rate. Like for example, we have this income tax over here now. So if we are looking at the income tax, we are going to look at the, income ranges over here. So if an individual have a income of like around 30,000, his normal rate is 20% for the tax. If his income is above 150,000 pounds a year or something, obviously his rate is going to be 45%. Similarly, if the person is earning from the dividends, he is going to have these rates. If he has some saving incomes, this rate is going to be applicable. We are going to study about it each and everything in detail. I'm just giving you an idea. Similarly, we have some allowances which are allowed to us. These are the ones which are over here. Then we have the residency status over here, like how to say that a person is a UK resident or not. We have the child benefit, we have the car benefit, we have the fuel benefit, company van benefit, individual saving account. If we have a rent a room, long story cut short, we are going to have the multiple rates over here. See, I mean, everything is over here. So don't overwhelm yourself into this, right? It's just that I'm giving you an idea that we are going to have the rates related to each and everything that we need to cover up over here, right? So everything is over here. It's just that I am giving you this idea. This rate table is gonna be provided to you within the paper. So you are simply going to, look it up, and you are going to simply account for it over here, right? Now, formally starting, if I talk about that, what is the purpose of taxation over here? What is the purpose of taxation? Now, overall speaking, the system of taxation and spending by the government and its impact on the economy of a country as a whole is something which we look over here, right? I mean, if I talk about the purpose of the taxation, I can simply write it down over here as well, that the government collects tax, right? It is the biggest source of income for the government to finance its expenditures, right? Whatever the government is planning to spend, obviously it has to earn first. And where the government earns from? Obviously from its people, right? And the government earns from the people in the form of the tax. So government takes the tax from you, then in return it provides you with the facilities, overall speaking, right? Similarly, I mean, we can simply say that any national budget that we have of any country always shows a big chunk of income tax collection. So any country's budget, if you talk about, that is going to have a major chunk of its earning from the tax, overall speaking. Similarly, one more point that we can say, obviously, the tax policies that any government has, they are used to influence the economic factors such as the inflation, employment levels, and the import exports as well, right? Because the government has to decide about a tax rate which is then going to influence that how the imports or the exports are going to be influenced, right? And obviously they are going to influence the behavior of the business and the individuals as well, right? As far as the behavior of the individuals is concerned, the spending of the behaviors is concerned, of the users is concerned now. We can simply talk about the UK tax system. The UK tax system, if I talk about the individually, the UK only, because we have to talk and study about the UK tax system now. The best thing about the tax system of the UK is it by default it develops a habit of saving. If you are in the UK and you're following the UK tax system now, by default there's a system embedded thing that is called as a saving, because it encourages your savings. It gives you the benefit of the taxation on the saving. That is, if you start saving your money rather than spending all out, from the tax point of view you get the benefits, right? If you keep on spending you will have to pay more tax, but if you start saving your money you will be paying lower tax. So by default the system is encouraging you to save the money rather than spending more, right? And by doing so, if you are spending less, you are consuming less. There is a less pressure, overall speaking, on the government as well to provide you with more. Because if you are spending more, then obviously, as the economic principle is, the more you spend, the more you need, the more demand you have, the more supply they have to bring in. The more supply they have to bring in, the prices are going to go up. So they are, balancing it up. Similarly, if you are doing a charity, they promote this thing, that you have a self consciousness in yourself. You are spending for the benefit of the humanity. You are giving the charity to the charitable organizations. So they promote this thing as well, that if you do the charity, you are going to have a certain tax saving. We are going to talk about that, how and what saving are we having. But they give you, like, from the economic point of view, they give you this, encouragement as well, right? Similarly, they encourage you to spend in the latest technology. Similarly, from the health point of view, they discourage you about certain, things, like, for example, if I talk about the alcohol, I talk about the cigarettes. I mean, in terms of the smoking and all, they have a very high tax rate over there in the UK. I mean, UK is one of the countries where there is a very heavy amount of tax on, as far as the cigarettes is concerned, or as far as the alcohol is concerned. I'm not saying that the alcohol or the cigarettes are not available over there. They are available, but they are available at a very high price, at a very high rate. I'm not sure about the Mauritius, but I'm very much sure about, India, or I'm very much sure about the Pakistan as well, that these countries over here, they have a very minimal amount of the tax on these tobacco, basically. Not about the alcohol in the Pakistan, because it's banned over here as well, legally speaking. But as far as the tobacco is concerned, they have a very little amount of the tax, honestly speaking. So technically, if I talk about the tobacco in Pakistan, this is the one of the cheapest country to have the tobacco over here, or the cigarettes over here. But if I talk about from the UK point of view, over there they charge you like anything. I mean, if you are consuming the tobacco, or if you are consuming the alcohol is concerned, right? So similarly, they discourage you, the tax system, basically, they discourage you, from the environment point of view, by having the, the cars who have a high CO2 emission and all, na. So basically, they are promoting the green energy, they are promoting the clean energy concept. I mean, they give you a very good relief on the hybrid cars. They give you a very, very good relief on the electric cars, but they give you a very lesser relief on the petrol or the diesel cars. Similarly, you must be aware about the Euro 2 technology or Euro 4 technology, as far as the emission technology is concerned of the car. So, the more compliant you have with this Euro 2, Euro 4 technology is concerned, the more tax benefit you are getting, the more relief you are getting when you buy a new car. But if you are buying a car which has a high CO2 emission or something, you are going to get a lower relief. So technically, they are encouraging you to buy such cars where the CO2 emission is very less, because on those you get a proper tax relief and all, na. So this is something which they are doing, encouraging in their system and all. So basically, if I talk about the purpose of taxation over here, I can simply say, from economic point of view or economic factor over here, that let's assume you collect 100 pounds, right? And you collect 100 pounds in the year, in the name of tax, right? Now, the overall expenses for the year are, say in case, 150. So over here, you are going to have a fiscal deficit of 50 pounds. And for this, you will have to borrow the money as to finance the operations, right? Like, say in case you collect 100 but your spending is 150, so in order to spend more 50, or in order to have the more 50 with you, you will have to borrow the money, right? So if you have to borrow the money, obviously you will be kind of stuck into the interest and all and everything now. So they encourage you to save, they encourage you to spend less, so that when your expenses are on the lower side, you are saving yourself from the fiscal deficit. So technically, if your tax collection, I mean, from the government point of view, is 200 and your expenses are 150, you are now in fiscal surplus of 50. And when you are into the surplus of 50, you will be able to spend this 50 on the general public at large in the form of some facility or the some sort of favor or some sort of a public work that you can do for the general public at large from the government's point of view I'm talking about, right? And then, third point, I mean, if I go, you also promote the social justice as well. When we have this taxation system now, this is something which is going to bring in a social justice as well. What do I mean by the social justice? Social justice means the type of the taxation structure that we have in the UK that is going to have a direct impact on the accumulation and redistribution of wealth within a country, right? And social justice, you have this, you know, social justice. This is something you can say by charging a higher percentage to high earning individuals and lower percentage to low earning income individuals, right? So you charge a higher percentage to higher earning, and then you charge a lower percentage to lower earning individuals as well. So you're bringing in a social justice because who is earning more, he has to pay the more tax, right? And in the social justice, we can, justify this point as a progressive taxation principle over here. Progressive taxation is greater the income, greater the tax percentage. And lower the income, this is lower the tax percentage. And around the globe, majority of the tax system in the world is based upon this progressive taxation, right? I mean, if I talk about the majority of the world overall speaking, right, that is something, this has this progressive testing system in the world, taxation system in the world, right? Then we have, the regressive taxation. Now, this regressive taxation, if I talk about, as the level of income increases, the amount of tax charged on commodities as compared to income decreases. In the regressive taxation, what happens? Your income level is increasing, but the tax which is being charged on the commodities as compared to the income, it decreases, right? I mean, if we can say, we can have this example over here that for instance, your income is £10,000. Tax on petrol is what? £10, right? Now, you need a total of 50 liters in a month, right? So in a month, total tax paid on petrol will be 50 into 10 is 500 pounds, right? Now, say your income increases to 15,000 pounds, but the tax on petrol remains the same. This is another way of looking as far as the taxation is concerned, and this is the, like, regressive taxation system over here, because it represents a greater proportion of income for a low income earner than for a high income earner, basically. Because the regressive taxation, what happens, you compare the, like, indirect tax that you have to pay as compared to your income levels and all. Third point that we have after the regressive or taxation is proportional taxation. In proportional taxation, percentage of tax remains the same as the level of income increases. In the proportional taxation, the tax is going to be remaining at the same percentage regardless of the amount of the income that you have, or the amount of the, like, the spending or whatever you have, right? Okay, like for example, I can say in the proportional, you can say that your earnings are 10,000 pounds and you pay tax at 10%, so that is going to be 1,000 pounds. Now your earnings are what? 20,000 pounds, and you still pay tax at 10%, so that is going to be 2,000 as well. So this is what basically the proportional taxation is. Then we had this ad valorem taxation over here. Ad valorem taxation is basically, you apply and calculate the tax based upon the value of goods or services that you receive, that is based upon their value, right? And this is called as the value added tax over here, right? Or we call it as the VAT as well, right? So this is going to be as a percentage of the value of the item is what you basically are doing. So this is what you calculate over here, right? Okay, now, overall speaking, if I talk about the tax authority in the UK, the tax authority in the UK is basically the HMRC, right? HMRC is Her Majesty Revenue and Customs. It is the government department that controls and administers all the areas of the UK tax law, right? So this is something which they are administering, they are looking and controlling as well. Now, the purpose of the HMRC is to make sure that the money is available to fund the UK's public services, help families and individuals with targeted financial support as well. Then these are the main purpose basically, right? So you need to have the money whenever you have to fund. Their main purpose is to have the money all the time to spend, for the public services and all. And then obviously they provide up the financial support for the targeted financial support for the families as well who are in trouble, or say in case if you don't have a job or something, you are looking for a job. So till the time period you don't find a job or something, they are going to financially help you. They will provide you a financial aid and all. Similarly, like, if you have children and they are like, the minors, or they have like, a very young age or something, so the government is going to finance you a certain amount so that you can spend on the children as far as their food items and everything else is concerned, right? Now, overall speaking, heading up the HMRC are the commissioners, whose main duties are. So at number one, at the top, we have the commissioners over here who are going to implement the statute law, and they are going to oversee the procedures or the process of the UK tax administration. So at the top, you have the commissioners who are going to look and they are going to implement as far as the tax law and everything is concerned. Then the staff who work for the HMRC are known as the officers of revenue and customs. So after the commissioners, you have the officers of the revenue and customs who are working and they are going to administer and oversee the tax matters as well. So HMRC have offices located all over the UK, many of which have specialist functions such as dealing with international businesses or the large companies. So basically, you already have developed the different parts of your business where you are dealing with the multiple matters. So you have a whole different department where you are going to look for the corporate clients, I mean, the big companies and all. And you are going to have the offices where you are going to deal with the individual clients or the individual persons, or the like, the salaried individuals as well. So you have the different departments where you are going to like cater the different categories of the taxpayers and all. So most taxpayers never deal directly with the local tax office, as HMRC encourage the taxpayers to file the tax returns online, use their website hmrc.gov.uk to answer the queries, or telephone or email a number of specialist helplines, like for example the self-assessment helpline. So in the UK, it's already developed that you have a self-assessment helpline, and they encourage you to file your return online on their official website, rather than bringing in the like lots of papers and then coming in asking for the help and all. They have already created a website where you are going to have the frequently asked questions, and they have the guidelines over there which are available to you, so as you can easily file your as far as the tax return is concerned, right? Now, the taxpayers are encouraged to file their tax returns online and pay by electronic means. So gradually, the UK is where they encourage you to go paperless. They encourage you to submit your forms and everything online, and even the payments as well, right? And then individual taxpayers and companies have to file return and pay tax electronically. I mean, it's compulsion for the companies that they are going to file their return online, and they are going to pay electronically, whereas the individual taxpayers, they can still send their returns and payments by post if they wish. So for the individuals, right, they still have this option that you can file your return and you can send your return by the post and the payment as well, because this is something they do realize, that as far as the companies are concerned, they can have an access to the internet and all and everything. But for the individual, might be possible he is not a IT gig or something, and he's not that expert into the IT and all now. So that is why they still allow the individuals to send their returns by the post, I mean, if they want to. And then under the self-assessment, the responsibility for reporting the correct amount of taxable income and paying the correct amount of tax is delegated to the taxpayer to self-assess. Now, this is the best part over here. I mean, regarding as far as the UK tax system is concerned, that they straight away give the responsibility or put the responsibility on the shoulders of the taxpayer, that he has to assess, and he has to, like, calculate his tax liability by all himself, and he's going to be responsible for that, right? When you submit your self assessment, now you are going to be held responsible for that. You will be accountable for that, that you have to submit a proper, self return over here, and you have to ensure that everything is accurate and correct as well, right? But still, the officers of the revenue and custom can still be requested to do the calculation of the tax payable based on the income reported or the individual taxpayers, but not the companies. But again, if you are not familiar with the tax returns and all, you are not, sure that if you have calculated the proper amounts or not, right? So you can still ask them to help you in as far as the filing the return and everything is concerned, right? And then moving ahead from here, we have one more thing over here, and that is the uh, sources of tax law in the UK. The basic rules of the UK tax system have been established, that we have the statute law, and then we have the case law over here. Then, if we talk about the statute law or the tax legislation, this is the law, and therefore adherence is mandatory. Tax legislation is normally updated each year by one annual finance act that follows from the proposals made by the Chancellor of the Exchequer in his annual budget statement. I told you earlier that every year in the Parliament, the Finance Act is presented in the Parliament, and that is unanimously approved by the Parliament, right? So this is how every year we are going to have a new finance act which talks about the changes, which talks about the rates and everything. So that is over there for 1 year, and from 1 year to the next, that is in place, and they go on and they keep on following that as far as the finance act is concerned. Then the statutory instruments are issued where detailed notes are required on an area of tax legislation. Now you can also issue the statutory instruments as well. Now, what is a statutory instrument? Statutory instrument is a supplementary note, right? It's a supplementary note which you issue along with the Finance Act, which contains the explanation, which contains the detailed assessment of how to calculate the tax in a, particular area, or if you talk about in a particular area, if you have a problem or something, or if there is a new rule out and there is a new way of calculating the tax or something, then you will be provided with the supplementary document as well, and that document is going to explain you how you have to tackle with overall speaking as far as the tax is concerned. Then we have the case laws as well. Now, the case laws, they refer to the decisions made in the tax cases brought forward before the courts. So often, the case challenges current tax legislation or argues a certain interpretation of the tax law, that how it should be applied. So these rulings are binding and therefore provide the guidance on the interpretation of the tax legislation as well. So you can use up the tax laws as well. You can use up the case law as well. I mean, if you want to have an interpretation, so you can get that interpretation from a case law as well. I mean, if you are trying to figure out that how you want to apply a certain rule of the tax onto your earnings or something, so you can have the reference from the, the court documents as well, the case documents as well. So they will give you a proper comprehensive idea that how to approach, how to apply, how to check, and then how to correct it up as well, right? So that is something which is available to you as well. Then again, you have this HMRC guidance as well. Now, as the tax legislation can be complex to understand and open to misinterpretation, the further guidance is issued by the HMRC in order to explain how to implement the law and give their interpretation of the law as well, right? So this is something which we can have over here as well. That same case, if the things are complicated or you are unable to get an idea, so the HMRC itself can provide you with the guidance over here as well. And the main type of the guidelines which are available, they are going to be the statement of practice. So this provides the HMRC's interpretation of the tax law and also provides the clarification or detail of how the rules should be applied. And then we have the extra statutory concessions as well. They allow a relaxation of the strict letter of tax law in certain circumstances. HMRC can make an this extra statutory concession to administer the tax system fairly and effectively, but cannot counter the clear words of the tax law. So we at times the HMRC it gives a bit of a relaxation, but you cannot amend the law as well. And then obviously this extra strategy concession confirms that the HMRC will apply a tax law to a specific group in a more favorable way than another possible interpretation to avoid undue hardship, unfairness, or an illogical result as well. So if we have a law and then the interpretation is something a bit hard or something, HMRC, if it decides, they can give you a middle way by which you can charge a tax. Again, that is something which is not going to be unjustified, or that is not going to be something illogical and all, right? So they can give you this as well. Then we have the internal HMRC manuals. They give you a idea as well. Then we have the website, we have the leaflets, we have the booklets as well, right? So they give you the idea, they give you the guidance as well. So we have these documents overall speaking, which gives us an idea and document and everything that how we have to go or how we have to apply it up, right? So this is technically which is available. Now, overall speaking, if I do the bifurcation, if I do the bifurcation of the taxes that we have, right? Or we talk about the types of taxes that we have to study over here. In this, we are going to have an income tax, number one, right? So first thing first, which we are going to have is the income tax. And in the income tax, we are going to talk about the tax which is applied on any income earned. And this is something we are going to have the investment income over here. We can have an employment income over here. We can have a self-employed person over here. We can have a property income over here. And then we can have a pension income over here as well. So this is the first tax that we are going to have over here. And if I talk about from the books point of view, from the Kaplan study text point of view, around 9 to 10 chapters, around 9 to 10 chapters are going to be related to income tax over here, right? That we have to study or we have to look. Then on the second number, you will be looking at the national insurance contribution. That is the NIC over here. As far as the national insurance contribution is concerned, this is something which is payable by individuals. This is payable by companies as well, companies, right? And this is something where you are going to have it on the disposal of assets. You will have on the land, you will have on the building, you will have on the shares, you will have on the antiques as well. And this national insurance contribution, around 2 to 3 chapters are over there in the book that we have to cover up. But no, sorry, not 2 to 3. This is the national insurance. This is going to be one chapter. Okay, it's covered in the latest book. It's covered in the one first in one chapter only. The whole story is covered up. So we'll be talking about in one chapter regarding this national insurance contribution. Then On the third number, we are going to have the capital gain tax, right? And the capital gain tax, if we talk about, this is again something which is going to be payable by individuals. It's going to be payable by the companies as well. And like around from 2 to 3 chapters or something, we will cover up over here as well. And then we are going to have inheritance tax. And if we talk about the inheritance tax, this is payable by person on executor appointed by or designated by court responsible for disposing of the estate of the death or the estate of any individual who has died, right? So we are going to calculate the inherent tax on all over there, right? So this inherent tax is basically covered in one chapter, and this inheritance tax, this can be payable on certain gifts as well, and we'll be talking about the lifetime gifts. We'll be talking about the death of individual. So basically, a bit forward, fast forward, if I say that, what is lifetime gift or what is the death of the individual, that is, say in case if I have a property, right, or I have some investments, if during my lifetime I transfer it to I transfer it to my children, right? During lifetime, if I transfer it to my kids or out, this is going to be classified as the life and okay, I'm sorry, I got disconnected. I was talking about the death and finally my connection died, huh? Okay, so I was talking about this inherent tax over here. I was just explaining you the concept that, the tax treatment or from the tax point of view, we have to treat it differently. That if my during lifetime, if I'm gifting anything to my kids or my spouse, the tax treatment is going to be a bit different. And if something is inherited to them at the time of my death or something that in my lifetime I did not give it to them or something, or I had my will, but it is disclosed at the time of my death or something that who gets what, right? So the tax treatment at that time is different over here, right? So this is what we have. And then overall speaking, we are going to have a corporation tax as well. And if I talk about the corporation tax, this is something which is payable by companies only, right? On their earned profits. And if we talk about the corporation tax, overall, we are going to cover up like around from 6 to 7 chapters over here related to the corporation tax. And then the last but not least is going to be the value added tax. And this value added tax, if I talk about, this is payable by and user, the user of goods or services. And overall speaking, we have two chapters in the book. One is the introduction and one is the application, overall speaking, that we have to, adopt over here, or we have to talk about overall speaking, right? So this is what we are going to, have over here. Okay, now moving ahead from here, let's just talk about, another basic terminology that I have to bring in. One is called as tax avoidance, that is legal means of avoiding tax. And then one is called as tax evasion. Tax evasion is illegal means of avoiding tax. Now, tax avoidance, that is the legal means to reduce or avoid your tax by using the tax rules for your own benefit, right? So legal means to reduce the tax or to use the tax rules in your favor in a way via which you are able to, reduce your tax, liability over here, right? For example, you have a rental property whose rent is 10,000 pounds, right? Now, your income is 10,000 over here. The rate of tax is 10%. So technically speaking, you are going to pay 1,000 as a tax, right? You are going to pay the 1,000 as a tax on it. Now, you have an option to disclose that rental property with you have an option to disclose that rental property as a joint property between you and your spouse, right? Now, same case, you disclose it as 50-50 ownership, right? Now, what will happen? You, your spouse, right? You are going to have income 50-50 over here. You are going to have 5,000 over here. Your spouse is going to have 5,000 over here, right? Now, both of you fall in a tax rate where the tax is at 5%. You don't have much income, right? If you report your income at 10,000, you report your higher income, you are going to have, income of, what do we say, as income rate of 10%, right? But if you disclose it at 5,000, your tax rate is going to be at 5%. So if you do so, your tax over here is now going to be what, 250, and your spouse tax is going to be over here 250. So technically you end up paying a total tax of 500 over here. Whereas if you 100% disclose this as your income, you have to pay a tax of 1,000. Getting my point? That say you report it as your income, then at that time you have to pay the tax at 10%, because you, same case, you have some other income as well, your tax rate goes up, you go into a higher tax slab rate or something, you have to pay more. But if you disclose it that this is something which is jointly owned by your spouse and you, or you disclose it that you have given a 50% income share to your spouse from the rental income, or whatever the percentage you want to decide, you disclose it up, right, on your tax return, then legally you are allowed to show it as 5,000 is your income, 5,000 is your spouse income. Now, as the income level is at 5,000, due to which you are now going to have a tax rate of 5% for yourself and 5% for your spouse as well. Now, the total tax by dividing the income which you are paying to the tax authority is 500. Whereas, if you would have reported it single handedly, you would have ended up paying 1,000, right? Now, this is what the tax avoidance is, and this is allowed. This is a legal means, right? You look for the loopholes, you look for the options where you can reduce your amount of tax, right? This is what the tax avoidance is. Now, tax evasion is going to be the illegal means of avoiding the tax by means of misinformation or misstatement withholding withholding information, like your earnings your earnings were 15,000 pounds as a rental income, but you didn't disclose it to the tax authorities. You are hiding it from them, not disclosing it. So this is tax evasion, right? You are not giving a full picture of what you have earned in the period or not, or you are hiding your income. This is called as the tax evasion over here, right? I hope it's clear to you. Okay, now moving ahead from here, we have to start now formally with the income tax. But before we do, it's time for a break. Let's just get up from our seats, walk around a bit, and we are going to come back in like around 4 or 5 minutes. So let's have a break so that when we sit back again, we go in one single stretch. Let's have a break. Okay, I'm back. So let's resume now. So we have this income tax over here. Now, if we talk about the income tax, we can simply say that any tax which is payable by a UK resident, that is an assessable person, during tax year on their income, right? Now, income tax is any tax which is payable by a UK resident who is an assessable person during a tax year on their income. So the very first thing which comes over here as a point of question, and that is a UK resident, right? So as far as the residency is concerned, we have to talk about it. And that is, if resident of UK, so it means you have to pay income tax on their worldwide income. And if non-resident, then he has to pay income tax only on UK earned income, right? So if you are a UK resident, you will have to pay the tax on your worldwide income. If you are not a UK resident, then you will have to pay the income tax on your UK earned income. That is the income which you have earned in the UK while being over there, you will have to pay tax on that, right? Now, as far as an assessable person is concerned, it means the person who needs to pay the tax. Assessable person is the person who needs to pay the tax. And in the UK, this is going to be individuals over 18 years, they have to pay the tax. Married couple, they have to pay the tax. And then there are the children who might have to pay the tax, right? So the individual over 18s, married couples as well, and then the children as well. So technically speaking, everyone is going to be an assessable person in the UK. Now, during a tax year, as far as a tax year is concerned, it starts from 6th April and ends 5th April the next year. I mean, over here, we are going to have a tax year of 25, 26. I mean, if we talk about over here, right? So we are going to look at the tax year of 25, 26 over here if we talk about, but overall speaking, as this is 2024, so we have the tax year of 24, 25. So I just wrote up an example that you can have a tax year of 25, 26, or you can have the 24, 25. So this is how basically the tax year is written like, right? Then we have the the point over here on their income as well. Now, as far as the income is concerned, as far as the income is concerned, you have different type of incomes like saving income, non-saving income, dividend income, and you can have an exempt income as well, right? So basically, when I say na, any tax which is payable by a UK resident. If you are a UK resident, you have to pay the tax on your worldwide income. If you are a non-UK resident, you will pay the tax on the income which you have earned in the UK. So this is a resident. Assessable person, anyone over there. I mean, 18 years of age, married couple, or the children, they are all the accessible persons. During a tax year, I told you the tax year starts from the 6th and ends on the 5th. And then we have the income over here as well that can be from any source that you have over here, right? Now, let's just go back to this very main point when we talked about the resident now. So let's just discuss this residency over here. Let's just go to the next page. As far as this residency is concerned, if you are a UK resident, so you have to pay the tax on worldwide income, as I told you earlier, right? As far as the non-resident is concerned, this is something, it is not part of syllabus. End of story, right? So it's not going to be the part of your syllabus, so we don't have to worry about it, right? So we are only going to focus on the situation where one person or one individual is a resident and he has to pay the tax on the worldwide income, right? Now, in order to establish the residency of a person, HMRC has given you 3 tests, right? The HMRC has given you 3 tests which you have to see, you have to check, and you have to ensure that those tests are met. On the basis of that, you can basically drive this fact that the person is going to be a resident or non-resident, right? We have test 1, which is automatic non-residency test. So test 1 is automatic non-residency test, that if this test is met, so it means the individual is going to be categorized as a non-resident. That is, I mean, let me write it over here, that if test 1 is pass, you pass the test, right? Then the person is going to be non-resident. And if test 1 is negative, right, or not clear, so you will move to test 2, right? So if test 1 is not clear and if it's not passed, then you are going to move to test 2 over here, right? Now, let me just show you from the graphical point of view as well. What's happening? Why is it not letting me join? Okay, now I have it. Okay, so this is test 1. If it's yes, if the test is passed, right? So you are going to be Over here, you will be automatic non-UK resident. If this test is passed, you will be automatically non-UK resident. And then if this test is not passed, if the answer is no, then you have to move to test 2, right? Now, what is this test 1? What is this test 1? Test 1 is a person is non-UK resident if they have lived in the UK during a tax year for less than. A person is non-UK resident if he has lived in the UK for less than. Less than what? We have 3 points over here. If he has lived for less than 16 days, 46 days, or 91 days, right? And for everyone, we again have its segregation to talk about. Now, if the person has lived for less than 16 days in a tax year, he is going to be a non-UK resident, right? Now, if the person lived in a tax year for 46 days in the UK, then we have to ask another question. Was the person a UK resident in the last 3 years? Was the person a UK resident in the last, okay, let's just take it to the next page. Was the person a UK resident in the last 3 years? Now, again, we have to go by this. Either it's going to be a yes, or either it's going to be a no. Now, first thing first, I am going to say no, right? If, no, let's just write the yes over here. But rather than writing like this, I should have inserted the flow chart, but anyhow, it's okay. Here we go. Now, if the person was a UK resident in the last 3 years, if the answer is yes, then we have to move to test 2, right? So if the person was a UK resident in the last 3 years, and this time he has lived in the UK for 46 days or something, and he was a resident in the last 3 years. So now if the answer is yes, you have to move to test 2. And if the person lived in the UK for 46 days and he was not a UK resident in the last 3 years, so he is going to be non-UK resident. Okay. Now, if he lived in the UK for 46 days, but he was never a UK resident before, so he is going to be a non-UK resident, right? Now, the third part, if he has lived in the UK for 91 days. So the question becomes, has the person working full-time overseas? I mean, this time the person came in the UK and he has lived over there for the 91 days or less than 91 days. Now, if the person who has lived over there for less than 91 days, right? So now again, the question becomes that what should be done for him? So if the answer is yes, that yes, the person is working full-time overseas, if this is the case, then he is going to be a non-UK resident. And if the answer is no, that no, the person was not working full-time overseas, then in that case, you now have to move to test 2, right? So this is what the basic flow chart over here is. That test 1 is automatic non-resident of the UK. If the person has lived for less than 16 days, no question asked. If the person went over there, lived for a week, 10 days, 14 days, or something, he's a non UK resident. If he lived for more than 16 days, but lived less than 46 days, then you are going to see that if the person was a UK resident in the previous 3 years, is it the first time he came to the UK and then lived over there for like around 45 days? Or he came over here earlier as well. So you have to see in the past 3 years, has he ever been a UK resident? If the answer is no, that he has not ever been a UK resident, but he lived over there for 44 days or something, then fine, it's okay. If he has not been a UK resident earlier as well, so this time he's not going to be a UK resident as well. But if the person came, lived over there for 40 days, and he has been a UK resident previously as well in the last 3 years, at year 1, 2, or 3, or all 3 years, he has been a UK resident. So this is something you're not going to say that he is going to be a UK resident. If this is the case, you are going to move to test 2. You're not going to answer it up over here if he has been a UK resident previously as well. You're not going to straight away give its answer. You will wait and you will move to the test 2, right? Then, if the person lived for like around exact 90 days over here, 80 days over there, right? So the next question comes in, okay, fine. The person has lived in the UK for 2 months or 2.5 months or something, then is the person living over there for 80 to 90 days, is he working full-time overseas, right? I mean, it can be the situation over here that if I talk about myself, I work in Pakistan, right? So I went to the UK and I lived over there for like around 3 months, or I lived over there for like around exactly 2 months or something. So this is more than 46 days. This is less than 91 days. I went with my family for the holidays and I lived in the UK for like around 2 months, right? 60 days. So, about my residency, the status is going to be that am I working full time overseas? If yes, then I will be a non-UK resident, right? If yes, I'll be a non-UK resident. And if no, I have not been working full-time overseas, then I have to move to the test 2, right? Similarly, a UK national might be possible. He's working overseas, and now this time he came back to his country to spend like around 2.5 or 3 months with his family over there. So, for his residential status, you have to check again that has he been working overseas or not, right? So, this is the flow chart which you have to see and you have to get an idea, right? Then we have this test 2 over here, right? This was the test 1. Now we'll go into the test 2. Test 2 is automatic UK residency, right? Now, for this again, we have 3 points over here. 1, 2, and 3. Now, if the person lived in UK for at least 183 days, if the person lived in the UK for 183 days, he has his only home or house in a UK, his only home or his house in the UK which he owns, right? Or he is working full time in UK. Now, if a person who has lived in the UK for at least 183 days, right? He has his only home or house in the UK only, or he is working full time in the UK, then that person is going to be called as a UK resident over here, right? Now, if you are unable to clear, if you are unable to clear, you are unable to answer about this one, right? Then in that case, what you are going to do is you are going to move to test 3. Like for example, the person lives for 150 days over there in the UK, right? And he owns one more house in any other country as well. Like for example, we have you guys over here. Let's say we have Asia over here, right? She has a house in the Mauritius, right? As well. She went to the UK and she lived over there for 150 days, right? Now, over here, we have this information working full-time overseas and all that, so we move to the test 2, right? In test 2, we saw that if the person has lived for 183 days at least, then he'll be a UK resident. But Asia went over there and she lived for 150 days only. So now what to do? She's not an automatic resident, she's not a non-resident as well. Now what to do? We have to move to test 3. Or Asia has a home in the UK as well, but she has a home in the Mauritius as well. Now what to do, right? So this test is not clear now. Now, if this test is not clear, we have to move to test 3 now. Now, test 3. Test 3 is called as a ties test, basically. And the ties test is the comparison between number of days living in UK or ties within UK, right? So we do the tie test. Number 1 is the family ties. Like, for example, if you have a close family member living in UK, for example, we can say your spouse, your civil partner, or your minor children, if they are living in the UK. So we say that yes, the family ties have been met. I mean, we can have the accommodation as well. Accommodation test is like, for example, okay, I have, why accommodation is wrong? Okay, it was supposed to have a double M. Okay, now, accommodation, if I go, like, for example, do you have a house in UK, or you used for living in UK during a tax year? You have to see and you have to talk about that. And then you can have like what? Substantive work. Substantive work means that if you have worked for 300 days of work in a year, or you have worked for 200 days, work in UK, right? So you have total 300 days of work in a year, and out of those 300 days, if you have worked for 200 days in the UK, then the substantive work is over there in the UK. Similarly, you have the days overall. And in the days test, basically, you see that if you have spent more than 90 days in either current tax or previous tax year, right? Or combined in both tax year. So you say that your days test is met as well, right? So you have to see about this one as well over here. Okay, it's not going forward, but let it be as it is. Okay, right? And then you have this country test as well. And country test is you have spent more time in UK than any other country, then you say that yes, this test is met as well. So these are the 5 points for the ties test that we talk about, and these tests are something which are going to guide you that either you should be classified or you should classify a person as a UK resident or not. One is the family ties. I mean, if your family is over there, the close family members, they are living in the UK, you have the accommodation only in the UK, or you use the house to live in the UK during that time. Substantive work, out of the 300 days, you have worked for 200 days in the UK. So you have spent more than 90 days in the UK, in the UK in the current tax year or in the previous year or combined in both. Then the days test is met as well. Then the country, you spend more time in the UK than any other country in the whole world. So you say that these tests are met. Now, the decision criteria. Individuals leaving the UK and arriving the UK. So this is what the decision criteria is now for the test 3. Now, to determine the residency status of the individual, consideration is given to the automatic non-UK residency and UK residency tests. And then if none of the automatic tests are met, then how many of the sufficient ties tests are satisfied together with the number of days spent in the UK. So basically, look, this is the test 1, right? This is the test 1, the non-UK residency. This is the test 2, the UK residency. If test 1 and test 2 are not met, you move to test 3. Now, what is the test 3 basically? That how many sufficient ties are satisfied together with the number of days spent in the UK. So you have to look at the number of ties which are met plus the number of days that you have spent. Like, for example, if you spend less than 16 days, even if you are a previously a resident, you were not previously a resident, automatically you are not going to be a resident for the UK. If you lived in the UK between 16 to 45 days, and if you are previously a resident, so now you are going to be a resident if 4 UK ties or more are met. So we have these 5 ties with us. You lived in the UK for 16 to 45 days, right? So now you have been previously a resident as well. So now you have to meet at least 4 ties to be called as a resident, right? So these ties, they have to be met. But if you are not previously a resident and you have lived in the UK from 16 to 45 days, so technically speaking, you are not going to be a resident automatically. You will be not resident. Then, if you lived in the UK for 46 to 90 days and you were previously a resident as well, now 3 UK ties are to be met. And if you are not a previously resident, then 4 UK ties are to be met. If you lived in the UK from 91 to 120 days and previously you were a resident, so 2 UK ties are to be met. For not previously resident, 3 UK ties are to be met, right? And then if you have from 121 to 182, then 1 tie or 2 ties, and then 183 more days, then automatically you are a UK resident over there. So if you lived in the UK in a year for 183 days or more, automatically you are going to be a UK resident, right? Done? Okay. Then the point is these rules make it more difficult for someone leaving the UK to lose UK residency rather than it is for someone arriving the UK to remain non-UK resident. And we are talking about this residency status from the tax point of view, not from some legal point of view or something. We are talking about it over here from the tax point of view, right? Now, let me just put up an example over here so that we can talk about it. And then we have, okay, let me copy it up. Okay, so explain whether or not the following individuals are resident in the UK in the tax year 21-22, right? So this is what basically we have to talk about over here, right? So overall, basically this is the residency status which we are going to see or we are going to talk about over here, right? Now, overall speaking, the question starts number 1. Dieter was born in Germany. He has lived in his hometown in Germany until the tax year 21-22 when he came to the UK to visit on 10th June 2021 until 18th January 2022 over here. Now, first one is the Dieter over here with us, right? So if I talk about the Dieter over here, he has always been in the UK, sorry, in the Germany. He never came to the UK. And now when he came on 10th June and then he lived till 18th January. So if I talk about the Dieter over here, in June, he came on 10th June. So we have 20 and 30. We have 20 days of June. Then July, August, September, October, November, December. 6 months are over here. So 6 months means 180 days as well. Then he lived till 18th January. Then 18 days of January as well, right? So his total days are 20 plus 180 plus 18 is going to be what? 218 days. If a person has lived in the UK in a tax year for 218 days, for 218 days, not previously resident, he is going to be a automatically resident over here. So Dieter, who born in Germany, always lived over there. When came to the UK, he lived for 218 days. So he is going to be an automatic resident over here, right? Okay. Number 2. After the Dieter, we have Simon. Now, he was born in France. Shelley has lived in her hometown in France until the year tax year 21-22, when she came to the UK to visit for a month. Now, she came to the UK to visit for a month, so it means she lived over there for 30 days, right? So if she lived for the 30 days, we have already seen this one over here, that a person is going to be non-UK resident if he lived for less than 46 days and he was not a UK resident in the last 3 years. Now, so no, this is a non-UK resident. So automatically, Simon, who never came over here, she lived for 30 days, never a UK resident before. So this time she is automatically non-UK resident as well. Then third, Fred. Fred has always spent more than 300 days in the UK and has therefore been the UK resident. Now, he gave up the work on 5th April 2021 and on 18th May 2021, he set off on a round the world holiday. He did not return to the UK until 6th April 2022. Initially, he spent 5 weeks in his second home in Portugal, but then did not spend more than 10 days in any other country while he was away. Now, while he was away, he kept in touch with his wife and young children who remained in family home in the UK. Now, if we talk about this person over here, Fred, he has always been a UK resident in the past. Now, he gave up his work on 5th April, then he left on 18th May. So technically, he was over there in the UK till 18th May now. So our tax year start from 6th April. So I am going to count 24 days of April. And how many days of May? He left on 18th May. So 18 days of May. So total 24 plus 18, what do we get? 34, 40, 42 days. So he was over there for 42 days only, right? Now, if I go up, so this is the 42 days now. Has the working full time? No, we have to move to test 2. When we came to the test 2, he lived in the UK, only home in the UK, working full time. So this is confusing. We have to move to test 3. Now, in the test 3, we have to go over here. Now, he lived for 42 days. Okay. So if he lived for 42 days, and this is going to be over here, He was a previously resident. So now we have to meet the 4 UK ties. 4 UK ties are to be met. So if we go up, these are the 4 UK ties. He has the close family ties in the UK because his wife and his young children are there. Number 1 tie is met. Accommodation, house in the UK. Yes, he has a house in the UK. So 2 ties are met, right? Then substantive working. No, this tie is not met over here. The reason being that, he left working in the current year. Now, then, number of days more than 90 days in either current tax year or the previous tax year or combined in both tax year. So yes, this, test is met as well. So he has spent more than 90 days in the current tax year or the previous tax year or combined, because previously he was over here and in this tax year he has lived for the 42 days. So the third tie is met as well. And then the fifth one is country, spend more time in UK than any other country. Okay. So if we go here, he was for 42 days over here. Then when he went, he was in, 5 weeks in Portugal. He was for 5 weeks over there in Portugal now. So 5 multiplied by 7, this is 35 days. So yes, he has spent 42 days in the UK, but 35 days in the Portugal. So UK days are more. So yes, country test is met as well. So 4 tests are met. Now, if he was a previously resident, and he lived in between these days, so 4 UK ties are to be met. So yes, this test is complete. His 4 ties are met. He is going to be classified as a UK resident over here. After the Fred, we have Olga. Olga, housewife, who has previously visited the UK on holiday for 30 days in each of the last 5 years and was not UK resident in those years. On 6th April, she purchased a holiday cottage in the UK. In the tax year, she visited the UK for 80 days, staying her UK home, apart from the 2 weeks when she stayed with her 17-year-old son, who had come to the study in the UK. For the remainder of the year, she lived her home in Germany. Now, she was not a UK resident previously. Then she came to live for 80 days over here. So if this is the 80 days we are going to have over here, and then 3 UK ties are to be met, right? And she got the house, find 1 UK tie is met. She has her son over there, families over there, second tie is met, and that's it. 2 ties are met, not the third one, because we can see the accommodation, we got this one as well. And there's no substantive working, there's no more than 90 days over here. And then the country test is, not met over here because she has been living in the Germany for the remainder of the year. So this is over here, she is going to be a non UK resident over here, right? So this is what we have overall speaking as far as the tie test and the residency is concerned, right? I hope it's clear. Okay. Now, we are going to stop over here for the day, right? I just got you guys through the basics overall, and we just talked about the basic income tax over here, right? From the theoretical point of view. Once you guys get enrolled yourself, I will be sharing the book and the exam kit as well. Meanwhile, if you guys have an access to the book, I would recommend you to read the chapter number 1 from the book, right? Because this is the basic introduction of the tax that we had over here today. And the basic income tax definition is something which we have started. And let me share my screen again. Okay, let me just take you back for one thing I want to talk to you about. This one. This is the income tax definition. and we said that any tax which is payable by a UK resident. So honestly and technically speaking, we have just discussed that from the tax point of view, what is a resident, right? We had these three tests via which we just talked about that what is a UK resident overall speaking, not more than that. So technically, we still have to talk about accessible person, we have to talk about the tax year, and then eventually we will start talking about the income. And then in the income, a new horizon will open, which is going to bring in the different forms of the income that we have from the tax point of view, right? So in our next class, we'll start off with the accessible person and we'll talk about more further in detail, because when in the accessible person, we talked about this individuals over the 18s, we'll talk about the married couple, and we'll talk about the children as well, that how and what to do about them as well. And then we'll have the basic computations over there as well, right? So I don't want to rush. There's no point of rushing. It's just that my request to you guys is just try to be regular and punctual. Ensure this thing. Rest of the things, leave it on me. And I try to have it, the as far as explanation is concerned, to the very much of a basic level that I could, right? And this is the most simplified form of the tax which we have explained and discussed over here. And I will try to have my approach just similar to this. And I look forward, that you will be, if you guys have any question or something, the WhatsApp group is going to be created. So you can, always drop me a message over there, and I will more than happy and I will more than be happy and more than welcome you guys over there to ask, and I will be happy to respond to you over there as well, right? So this is all what I have from my side for the day, and I am going to see you next week again, same time, same place, same channel. Till then, take care of yourself, your family, your friends, and the people around you. Have a lovely week ahead of you and the weekend as well. Till we meet again, bye bye.